Welcome to the Deep Dive. We're here to take your sources, all that research and information you gather, and really break it down into the key insights you need. Today, we're digging into TTM Technologies' second quarter 2025 results. The earnings call materials you provided show, well, a really interesting mix. We've got record performance, some big strategic shifts, and some near-term things to watch. Our goal here is simple. Unpack the numbers, unpack what management said, and give you a clear picture of what's driving TTM right now. So let's kick things off with those headline numbers for Q2 2025.
Right, and they were, frankly, very strong. TTM really knocked it out of the park compared to their own forecasts and what the street expected.
Okay, give us the specifics.
Revenue hit $730.6 million. That's a big jump, 21% higher than the same quarter last year.
21%. Okay, and what about profitability?
That was strong, too. Non-GAAP EPS, earnings per share adjusted for certain items, hit a record $0.58. That beat the consensus estimate by a solid 11.5%.
A record EPS number, operationally.
Margins. Non-GAAP operating margin came in at 11.1%. That's up 210 basis points year over year.
So a full 2.1 percentage points better. Shows good execution.
Exactly. And cash flow looked healthy, too. $97.8 million from operations, which is 13.4% of their revenue, helped keep their net leverage pretty comfortable at 1.2 times. So, yeah, by the numbers, a really stellar quarter.
Okay, those headlines are definitely strong, very compelling. But, the real story is often underneath. Let's peel back the layers a bit. Let's really examine what drove this Q2 performance and where TTM seems to be heading strategically.
Well, what's fascinating when you dig in is the strength in their key end markets. I mean, aerospace and defense, or A&D, just continued to be a powerhouse.
That's been a consistent theme for them, hasn't it?
Absolutely. It hit 45% of their total sales in Q2. That's a record revenue level for that segment, and it grew 21% year over year.
And the future looks solid there, too.
Seems like it. The A&D program backlog is still huge, $1.46 billion. That gives them a lot of visibility down the road, especially with defense spending trends.
Okay, so A&D, strong as expected. Now, what about the tech side? Particularly AI, everyone's talking about.
You're right, and this is where TTM's story gets really interesting for that whole AI narrative. Their data center computing segment, it climbed to 21% of total sales. That showed 20% year-over-year growth. And management was very clear this is being driven specifically by generative AI applications.
20% growth directly tied to Gen AI. Wow.
And they expect it to get even bigger. They guided for it to reach 24% of sales in Q3.
Okay, so accelerating AI demand in data centers. What else?
Networking saw just exceptional growth, 52% year over year.
52%.
Yeah. Also fueled by AI demand, specifically for high-speed switches needed for, AI infrastructure.
It's incredible.
And even their medical, industrial, and instrumentation segment, which sometimes gets overlooked, saw a 28% year-over-year jump. Part of that is benefiting from robotics and automated test equipment, which are, again, tied into the build-out for AI.
So AI isn't just one segment for them. It's really threading through multiple parts of the business.
Exactly. It's become a very real, very significant revenue driver, not just hype.
That's a pretty powerful growth story from AI and defense.
Yeah.
But you always need the full picture. Was everything booming?
Well, no. To give that balanced view, we should definitely talk about the automotive segment. It's still significant, about 11% of their sales, but it actually saw a slight dip, down 1% year over year.
Only 1%, but still a decline when other areas are surging. Why?
Management pointed to inventory adjustments still working through the system and just generally softer demand in the auto sector right now.
So that does raise a question, doesn't it? You've got these massive tailwinds from AI and defense, but how do they manage this softness in automotive? Is it just a temporary thing?
That's the key question. It highlights why their diversification is important, but also maybe where strategic focus needs to be applied, especially as they pivot to higher value stuff.
Okay, so market dynamics aside, you mentioned strategic shifts. What are the big moves TTM is making?
They're making some really significant proactive moves. For one, they bought a huge facility, 750,000 square feet in Eau Claire, Wisconsin.
Wisconsin. That's interesting. Why there?
Well, this seems very deliberate. It's specifically for future high-volume U.S. production of advanced PCBs. Printed circuit boards. Think the really complex stuff needed for generative AI hardware.
So tying into that AI growth again.
Exactly. And there's a defense angle, too. They're anticipating the 2027 National Defense Authorization Act, the NDAA. That's expected to require critical defense PCBs to be sourced outside of China. So building up U.S. capacity is crucial for that.
Right, securing the supply chain for defense. That makes sense.
Yeah, connecting that Wisconsin investment to the bigger picture, it's clearly about national security, de-risking the supply chain. But, and this is a big but.
There's always a but. Cost.
Right. Management was upfront about it. Pricing from Wisconsin could be at least 50% higher than making the same boards in China.
It's 50% higher. Wow. That's substantial.
It really is. So the strategic challenge is getting customers, especially in defense and the big hyperscalers, to commit to those higher prices. They need strong agreement on the value, the security, the domestic supply for that investment to really work long term. It tells you a lot about the cost of reshoring or friendshoring.
Are they only looking at the U.S. for expansion or diversifying elsewhere too?
No, they're also looking globally. They just acquired land rights for another 10 acres in Penang, Malaysia.
Penang, okay, building on their existing presence there.
Exactly. The plan is to set up a second production site there. Again, it's about diversifying the supply chain, having options beyond China in a key region for tech manufacturing.
But how is the existing Penang facility doing? I remember that was a big focus previously.
Ah, yes. Well, that's where they mentioned some growing pains, as they put it.
Growing pains, like what?
Revenue from Penang did reach $5.2 million in Q2, which is progress. But the ramp-up is definitely slower than they initially expected. It now looks unlikely to hit break-even by the end of Q3, which was the target.
Why the delay?
They cited longer than expected customer qualifications, getting customers to approve the new lines, and also some challenges with getting personnel trained up quickly.
And that's impacting margins, I assume.
It is. It created a margin drag that actually got a bit worse in Q2, hitting about 210 basis points on their overall operating margin.
2.1% drag. That's noticeable.
Definitely. But management did stress that customer interest in Penang is still very strong, so it sounds more like an execution timing issue than a demand issue. Just need to work through the bumps.
Okay, facility expansions, market shifts. What about leadership? Any news there?
Yes, actually some significant news. CEO Tom Edman announced he plans to retire.
Oh, okay. Ben.
Once a successor is appointed, the expectation was before the end of 2025. He plans to stay on the board, though.
And do we know who the successor is yet?
We do now. This was a post-call update, but relevant to the sources you provided. Edwin Rox has been named the new CEO, effective September 2nd, 2025.
Edwin Rox. Okay. So a leadership transition right in the middle of all these big strategic plays. That adds another layer.
It certainly does. Any leadership change brings questions, but also potentially new energy and perspective.
And one more thing on structure. They changed how they report their segment.
That's right. Trying to give investors, people like you listening, more clarity. They've implemented a new 3-segment structure. It breaks down into aerospace and defense, commercial, and then RF and specialty components.
So separating A&D, then grouping things like auto and data center into commercial.
Broadly, yes. The idea is to give clearer, more granular insight into performance across these different market exposures. Should make analysis a bit easier.
Okay, so pulling all these different threads together,
right? What's
the immediate outlook? What do they guide for Q3?
For the third quarter of 2025, TTM guided for net sales somewhere between $690 million and $730 million.
Okay, a bit of a wider range there. And earnings.
Non-GAAP EPS is projected between $0.57 and $0.63 per share.
And importantly,
yes, that guidance includes the expected operating costs and the drag from that slower Penang startup. So they've factored that headwind in.
Right. So looking at Q2, and these strategic moves, it really feels like TTM is making a very clear, very decisive pivot. They're leaning hard into those higher value mission-critical technologies, positioning themselves right in the middle of 2 huge growth areas, defense and the AI compute build-out.
Absolutely. That's the core story here. You've got the steady, resilient demand in A&D, helped by defense budgets and that big backlog. And then you layer on top these really powerful tailwinds from AI driving data center and networking demand. It paints a pretty constructive long-term picture.
Even with the costs involved in the new facility.
Even with those, the investments in Wisconsin and the second Penang site look like smart, proactive moves to de-risk supply chains and grab regional demand. It's a long game, prioritizing strategic position over just the lowest possible cost today.
Interesting, though, how the market reacted. You'd think with record results, AI momentum, the stock would soar.
Yeah.
But it was more subdued.
Yeah, it was a bit of a mixed bag, which is often the case. Right after the call, the stock ticked up slightly, maybe 1.7%. But then over the next few days, this narrative about a weak Q3 view, basically focused on that guidance, took hold, and the stock actually pulled back about 11%.
11% pullback after record results. That's quite the divergence.
It is, and that's where experienced investors really need to look closely.
Yeah.
The immediate stock move suggests worry about Q3 guidance, maybe the leadership change, but management kept emphasizing execution, pipeline strength, those big strategic investments. It points to a solid operational base and a clear long-term plan.
So the market might be focusing too much on the short-term headwinds.
Potentially.
Yeah.
Weighing those near-term challenges like Penang's ramp or the Wisconsin costs more heavily than the long-term strategic gains in AI and A&D. For context, as of September 2nd, the stock was around $44.96, trading actively. And that new reporting structure should eventually help investors see the strength in those key areas more clearly.
Okay, now for the part where we put on our hypothetical hedge fund analyst hats. It's time for our This Is Not Financial Advice segment. We're going to pitch an outrageous but plausible trade idea based on everything we've just discussed. Remember, purely theoretical.
All right. Given TTM's big strategic shift and some of those cross currents we talked about, here's a thought. What about a theoretical long AI, short automotive exposure pair trade, but within TTM itself?
Interesting. So not betting on the whole company, but on the internal shifts.
Exactly. The logic is that the CEO transition, the Penang ramp issues, the higher costs in Wisconsin, all that might create a bit of a temporary cloud over the whole stock. Sentiment overhang.
Okay, so how would the trade work theoretically?
The idea would be to synthetically short sell TTM's automotive revenue exposure. That's about 10-11% of sales. And as we saw, it's facing headwinds, inventory issues, soft demand. The bet is that this segment continues to be a drag, at least relatively.
And the long side.
Concurrently, you'd go long, again synthetically, on an instrument tied specifically to TTM's booming AI-driven revenues data center and networking. Remember, data center alone is guided to be 24% of sales in Q3, and networking had that massive 52% growth. You're betting on that accelerating demand from hyperscalers and TTM's pivot really paying off.
So you're trying to isolate the A defense strength from the automotive weakness and near-term operational noise.
Precisely. The market might be fixated on the overall Q3 guidance, overlooking the much strong momentum in specific high-growth parts of the business. This theoretical trade aims to neutralize broader market moves affecting TTM while capturing the upside from that internal strategic reorientation, turning a potential weakness, the drag from auto, into a relative strength against the AI boom.
Of course, huge theoretical risks there. Isolating those dreams isn't easy. Market sentiment is fickle.
Absolutely. Purely a thought experiment.
Okay, so let's recap this deep dive then. TTM Technologies put up a record-breaking Q2. Really impressive numbers, propelled by very strong demand in aerospace and defense, and this surging wave of AI applications hitting their data center and networking segments.
Right. And they're not just riding the wave, they're actively investing new capacity, regionally diverse, including that big bet on U.S. production in Wisconsin. Plus, they've restructured reporting for more clarity.
But there are things to watch. The CEO transition, getting that Penang facility fully up to speed, those are real near-term factors.
Definitely considerations. But the overall strategic direction seems pretty constructive. It's underpinned by that solid defense demand and, crucially, those powerful ongoing tailwinds from AI.
Well, thank you for tuning in to The Deep Dive. And just to reiterate, none of this is financial advice. Do your own homework before making any investment decisions. As you think about TTM balancing these immediate challenges with its long-term AI and defense vision, maybe consider this. What other established companies might be quietly undergoing similar transformations for the AI age, and is the market perhaps missing those stories too in its focus on the short term? We always appreciate your feedback, and we look forward to our next deep dive.